Hi, I'm Max Keiser. This is the Keiser Report. The currency wars are heating up around the world. Stacy?
Max, there are so many super committees and super bodies that I thought we here should form one on the Keiser Report, which is why we have the same exact shirt on.
Oh, great. We should have little name lapels, too. Tags. Hi, I'm Max.
Well, all these super committees and super bodies are in the news. Super committee that runs America urges end to the zero bound, demands issuance of negative yield bonds. So the Treasury Borrowing Advisory Committee has demanded that, quote, it was broadly agreed that flooring interest rates at zero or capping issuance proceeds at par was prohibiting proper market function. The committee unanimously recommended that the Treasury Department allow for negative yield auction results as soon as logistically practical.
That's right. We've been predicting this for really almost the entire duration of this show, that the 0% interest rates would give way to negative interest rates. So that means that the bank takes 2% of your money every year just for keeping your money at the bank. Or the Treasury bond issuance, they issue the bonds at a day one loss. You're in a losing position from the second you take possession. And this is a way, again, to confiscate wealth, to protect bankers. And it's no coincidence that this news comes after the MF Global scandal, because they were testing the waters with MF Global. If Jamie Dimon and JP Morgan and John Corzine could confiscate people's customer money out of their accounts, just steal their money, and nobody did anything about it, then of course they said, okay, now we're going to issue negative return bonds and negative interest rates, and the wealth confiscation now is in full force.
Zero Hedge reckons that this is JP Morgan and Goldman Sachs who are pushing for this, and say, and what JP Morgan and Goldman Sachs want, JP Morgan and Goldman Sachs get. And once we get the green light on negative yields at auction, next up will be the push for the Fed to impose negative rates on all standing securities, which means that coming soon, savers will be literally paying to hold cash. And that will be the final straw.
It's just confiscation of your money. It's how fascist regimes in the past have not hesitated to just confiscate people's wealth. The resulting impoverishment ends up in creating state-sanctioned, or in this case, bank-sanctioned ghettos. And then this is the beginning of a financial pogrom, a financial holocaust. And this is the program in place now. Those who have gold and silver, of course, are going to be the only survivors, as we've been saying on this show for a number of years as well.
So the Fed doesn't believe in the dollar, clearly, because they wouldn't be confiscating the capital like this. Here, over in Europe, Bundesbank sinks deeper into debt, saving Europe. So Germany's Bundesbank has entirely exhausted its stock of private assets and run up €250 billion in liabilities, propping up the Eurozone system, testing the political limits of EMU solidarity in Germany. The operations of incurring all of this debt are part of the European Central Bank's Target 2 network of automatic payments between the national central banks of the Euroland Club. The Bundesbank has already provided 496 billion euros to countries in trouble, chiefly Greece, Ireland, Italy, and Spain.
Yeah, well, the Bundesbank has plenty of room. It's fantastic. Their interest rates are still 2 or 3%. They can lower them down to 0%. ECB can take on many more trillions of dollars worth of bad debt. And remember, folks, it's all legal.
Now, the article mentions Professor Westerman, who says that the ECB is also printing money and that their latest lending has not been, quote unquote, sterilized and amounts to money creation. While it has averted a banking crash, the move is double-edged and could intensify the crisis, since the bank cannot ensure that extra liquidity stays in the Club Med block. Professor Westerman sees a moment when all that money, all of that extra liquidity currently sitting in the Club Med region, Italy and Spain and France, that it could all come rushing back into Germany, and they call it the tidal wave of liquidity. Quote, if everybody tries to get out of crisis states at the same time, this will overwhelm target 2. In principle, a speculative attack could occur within a day. We are heading towards the multiple equilibria zone in which beliefs of a breakdown of the Eurozone are self-fulfilling.
No way. Don't forget Deutsche Bank. Deutsche Bank is the Goldman Sachs, JP Morgan of the ECB. It can absorb many, many trillions of this junk without breaking a sweat. And remember, folks, it's all legal what Germany is doing. It's all legal.
So the next headline, also from Ambrose Evans Pritchard from The Telegraph, says the perils of Mario Draghi's 1.5 trillion euro blitz. A disturbingly large number of credit experts warn that the ECB lifeline is not the game changer that the markets seem to think, cannot in itself save the Euroland, and may prove counterproductive, perhaps soon. Suddenly, all these credit experts are thinking, hey, all of this lending to the banks, these trillions and trillions and trillions of dollars and euros and fake fiat currencies around the world, all of it actually may blow up because Alberto Gallo from RBS says Draghi's 489 billion euro loans to banks at 1% for 3 years, the LTRO, is having all kinds of toxic effects, which is disturbing given that the Financial Times splashed a headline that the banks may draw down another trillion euros at the second LTRO in late February.
Well, what they're not taking into consideration is that all of this debt is off the balance sheet, and all the income is used immediately to pay off Deutsche Bank and Germany. So Germany has effectively seized control of Greece. They've seized control of Portugal. They will soon be totally in control of Spain. And they're totally in control of the Eurozone. It's all legal, remember. They put all that bad debt off the balance sheet, keep interest rates at 0%. If interest rates were to rise to 2, 3, 4, 5%, of course the game is over, but that's never going to happen because there's no stopping the creation of credit default swaps and other derivatives that are used to keep interest rates artificially low. So you don't have that risk. So as long as they can create trillions, hundreds of trillions of dollars worth of derivatives, you don't have interest rate risk. You have political risk in the countries that are not Germany. Germany doesn't have any political risk because they are Europe.
Alberto Gallo from RBS goes on to say that he expects 5 trillion euros more in deleveraging by European banks before it's all over. So anybody who thinks there's inflation is wrong. However, this is massive deflation, which is often the predecessor to hyperinflation.
Massive deflation, which is used to keep interest rates at 0%. Will the inflation come along? No, because there is no tolerance for that in Germany. They don't like inflation. Remember Weimar Republic. They're anti-inflation, so they will continue to run the entire game. They own all the pieces on the board in the Europe zone, and when the dollar crashes, then Germany is going to own the dollar as well. Germany is the true superpower here, not China. China is Apple's cheap manufacturing hub. It's not a power per se. Germany is an actual powerful country.
But this 5 trillion euros deleveraging, in a deflationary environment, cash is king. If you have money, you're happy. Many Germans have huge amounts of gold. Many Chinese have a lot of gold relative to their income. So they'll be happy. In Spain, in Greece, in the UK, in Ireland, the citizen, formerly known as the citizen, now known as the consumer, they have a lot of debt.
Yeah. Well, Chinese people are unruly. That's not going to serve them well in the currency wars. Their government is going to have their hands full.
But remember, going forward, that real burden of debt in a deflationary environment, the burden goes up. So all of these debtor nations is going to get worse. Now, you and I have been to Athens, and we've seen that those people, you can talk all you want about Germany and how hurrah they are, but they've got to contend with those Greeks. And we saw those Greeks, and I have to say, we were in Tahrir Square as well. And the people in Athens were far angrier than during the Egyptians during their uprising.
Well, as was reported on Zero Hedge this past week, Greece is now re-entering the feudal period. The economy is so crushed. You literally have a nation of disenfranchised tenant farming peasants who have complete inability to mount any offensive whatsoever.
And then I have a final headline here about Greece. IMF official admits austerity is harming Greece. Paul Thompson, head of IMF's mission in Greece, concedes that social tolerance and political support have their limitations. In an extraordinary departure from the script the IMF has followed to date, the Danish official, who is also in charge of the IMF program in place in Portugal, acknowledged there was a limit to what society would endure. He said, quote, "While Greece certainly will have to continue to reduce its fiscal deficits, we want to ensure, considering that social tolerance and political support have their limitations, that we strike the right balance between fiscal consolidation and reforms. As such, the IMF had cautioned against an excessive pace of fiscal reduction." So this goes with your theme that the US and Germany are at the heart of this global neo-feudal system. When these austerity programs were imposed far away down in Latin America or Asia, the Germans and the Americans and the French felt safe issuing austerity measures because they weren't anywhere near the peasants who would riot. Here, Athens is a little bit too close, I think, to Berlin.
Well, no, Athens, their opportunity was last year to have a coup d'etat and get rid of Papandreou. And they could have been put in a populist government and they could have saved themselves. But they failed to do that, so it's finished for them. Ireland, similarly, is toast. No hope for them whatsoever. Portugal, under the bus. Spain, no. Italy, they have 2,500 tons of gold. If they can hold on to it, they're in good shape. But I suspect that the current government will sell Italy's gold at a deal with the IMF because they're totally corrupt. This leaves only Germany at the end of the day.
Well, Max, this super committee of blue shirts, I think we've decided, on my part, on the final say here, Christine Lagarde, she was up at Davos. I think she had it right. You know, here we saw that Greece is no longer going to have these austerity measures, or the IMF is afraid of it. Christine Lagarde also said in Davos that Portugal, Spain, all the rest of Europe, all these peasants, they're a little bit too close to Paris, London, and Berlin, and maybe they're a little bit too afraid of austerity measures here.
Well, let's talk more about that. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming away. Stay right there. Welcome back to the Keiser Report. I'm Max Keiser. In from Santiago, Chile, Gonzalo Lira, welcome to the Keiser Report.
It's a pleasure. Thank you.
All right, so you're a bit of an expert in the area, and one of the hallmarks of the IMF in Latin America, we were talking about them in the first half of the show, was austerity, which they used to call structural adjustment policies. Just before Davos, here we are, the IMF wants Europe against implementing further austerity. Yeah. So what's going on here?
Well, it's basically, they want to squeeze the little countries, such as Greece, Portugal, and Ireland especially, but the big ones, they're sort of afraid of them. They're basically afraid of Italy and Spain, basically telling the IMF and the EU to stuff it and exiting the Eurozone altogether. And so that's why they're treading very carefully, and now they're doing this about face that, austerity is great for Latin American countries and for the little European countries, but these big European countries like France, like Italy, like Spain, no, austerity is bad for them. What we need is some sort of monetary loosening of some sort, and that's where we have LTROs. I mean, we're going to have
LTRO is
long-term refinancing operations. It's essentially the banks, the central bank, the ECB, is lending free money to the banks, and they in turn are taking this money and using it to prop up the bond markets. It's basically stealth monetization. And this is what the United States did, where Ben Bernanke lent out, as Bloomberg reported, $7.7 trillion between loans, warrants, and guarantees to the too-big-to-fail banks. Now, they took that money and invested it in U.S. Treasury bonds. Now, it seems that the LTRO operations that are going on with the ECB that are projected to go on during the year 2012, which are expected to be about €1 trillion, are going to be in that direction. Basically, stealth monetization. And so what we're going to see is a continued deterioration of the euro against the dollar, and especially against gold, and a propping up and a muddling along of the European situation. And there is not going to be any austerity insofar as Spain, Italy, or France are concerned. So this, the talk of austerity, it's just purely cosmetic and just for the headlines. It's not real.
How can these organizations be so professionally incompetent? I mean, if you go to a doctor and you say, I've got a chest pain, and he gives you a colonoscopy, or he amputates your foot,
Yeah.
I mean, you would be rightfully upset, and you'd sue him, and you wouldn't consider him to be a serious doctor. Yeah. But when you go to the financial doctors at Christine Lagarde at the IMF, and they seem to be incompetent on this scale. They seem completely oblivious to the reality of economics and finance. Yeah. Why don't they just revolt? I mean, this has worked in the past. Why don't people just revolt? Why are they putting up with this?
That's a good question. That's the million-dollar question. I mean, I think that basically these people are just dressed in nice suits, but they're empty suits. They're just fools for the most part. Or there are people who are so craven in their need for political support and political opprobrium that they will do anything to keep happy the powers that be or the politicians that they ultimately have to respond to.
Okay, let's talk about, because Spain's unemployment rate has recently jumped to 23%. Right. Suicides are soaring in Greece. These are the sort of conditions that, we've seen before in Latin America that leads toward dictatorships. Right. Is that in the cards now?
I think what we're going to see are populist politicians making hay from the current economic downturn. What you're going to see is, for instance, people like Marine Le Pen really going out there and saying, we don't need this euro. All our problems started when we joined the eurozone. Let's get out of the eurozone. Now you're going to have those politicians in Spain and Italy and France. They're all going to be saying that same tune. And they are going to get political traction. They are going to get the votes.
And who will be scapegoated this time?
Who will be scapegoated? I think it's going to be bankers. And I think it's going to be politicians who are enamored of the Eurozone, the one continent, supercontinent idea. And I think that those are the politicians who are going to suffer, and the bankers, I think, are going to suffer if there is a populist politician who is able to transform people's discontent into votes.
All right, now we recently interviewed Warren Pollock, and he said he believes that bank holidays are imminent. What are your thoughts on this?
I don't think that there's ever going to be any kind of bank holiday in the near-term future. I think it's fun to imagine, a bank holiday, and they're all hell breaking loose and all the rest of it. But it's not going to happen for a very simple reason. Any kind of bank holiday in any country, no matter how small, Greece, Portugal, is going to be like a giant red flag. And so the bond vigilantes are going to go after that particular country, and everybody's going to panic. A bank holiday would create more trouble and more panic than simply muddling along and having the ECB continue with stealth monetization.
Okay, that was the argument before Lehman Brothers collapsed, and the capitalization of Lehman Brothers is not far behind an Ireland or a Portugal.
Yeah.
So it's roughly equivalent to the same size. It was systemically too important, they're not going to let it collapse, and yet, because of some wrangling that was done in the boardrooms of these banks on Wall Street, for a lot of personal reasons we find out later, animosities, between these guys, they simply let Lehman collapse, and we had this huge collapse in 2008. So that was a bit of a bank holiday for Lehman and Bear Stearns, and there was a credit seizure in these global markets. It wasn't an official bank holiday, but the global credits froze.
Right.
Now,
well, but that's different, though.
Right.
That's basically, you have a credit crunch. Is it going to happen again? I actually don't think so, because I think that these particular dogs have learned their lesson. Ben Bernanke, Mario Draghi, respectively the head of the Federal Reserve and the ECB, the European Central Bank, what they're going to do is they're going to put out as much liquidity as possible to prevent any kind of 2008 liquidity crunch, because that was the last crisis that they know. For instance, at this point in time, they are not afraid of inflation because they think, inflation is so 70s. We're over that. So we don't have to worry about inflation. We have to worry about liquidity crisis. And so the next time we have a liquidity crisis, we're going to have so much cash sloshing in the system that there is not going to be a 2008 situation.
But they can't create inflation. They would love to see some inflation.
Sure.
They can't seem to create inflation. For every trillion in fresh credit they force into this dead duck of an economy, there's another 5 trillion suddenly in losses on banks' balance sheets that were not disclosed, that more than eat it up, that liquidity, and it actually net, its deflationary spiral continues unabated. There's no way to stop this credit crunch.
I'm not quite so sure. Look, the situation, I agree with you that a lot of the losses sort of seem to sterilize a lot of the money printing going on. But you do have to look at certain key commodities, particularly copper, oil, and gold. Now, gold has reached historic highs against the euro. We have oil up there over 100. We have copper comfortably over 350. So we're seeing that the possibility of inflation is not far away. I would liken the situation to sort of like building a really big bonfire with a lot of dry tinder and throwing gasoline on it. And you're saying, well, there's no fire. Yeah, but it only takes a single match. Once that match gets thrown in, you know, it's sayonara to the whole bonfire.
All right, well, there seems to be a bit of a split because the deflationary contraction that's changing the global markets have repositioned gold from being a commodity to being a currency. Same thing for oil to a lot of degrees. It's now a currency, and to some degree you could argue, but maybe not so successfully with copper. But so this is what's driving action in those markets versus some inflationary expectation. But I want to switch gears for a second. Former war reporter Chris Hedges is suing the U.S. government over the NDAA, the National Defense Authorization Act. He believes the NDAA, the corporations and banks preparing for economic meltdown to which they will need to deploy military onto the streets. He's making this connection. Your thoughts?
That they will ever deploy military onto the streets, they already have. I mean, if you start looking in every American city, you have Homeland Security agents who are stopping people when they get out of trains, to check to see if they have explosives, which is sort of ridiculous. I think that, the possibility of the United States becoming a police state, we're already there. So I don't exactly see what exactly the point is. I think that Chris Hedges, I respect him, and I wish him the best of luck. I think that he's just going to be spinning his wheels. I think
what he's saying here also is that it's a preparatory act, assuming that there is a revolution in America, and the corporations who are going to be on the gallows, so to speak, they're taking this NDAA as a way to authorize or make it easier for them to, let's say, hire mercenaries, hire Blackwater, arrest people for no cause, throw them in the gulag, this type of thing.
I think it's a lack of education. And the fact that we have such a cruddy education system in the United States sort of like is paying off for a lot of people who want to, cover over what's going on. Because in a more educated populace, the kinds of things that are going on in the United States would not be allowed, but they are happening in the United States. The NDAA, now this issue with Chicago that they're going to privatize their police force or something.
Yeah.
I mean, it's dreadful, despicable, but people are just saying, oh, it's no big deal. And I think what's happening is that people are thinking, it's not going to affect me, so why should I care? Now that is the end of a democracy, when people start thinking that. And I think that's the point that has been reached in the United States, that people say, since it doesn't affect me, why should I care? Oh, my neighbor gets dragged away by Blackwater's, people. Maybe he must have done something, so I'm just going to ignore it.
Now, when you travel around Europe, Gonzalo, over the past few weeks, what are some of the economic differences you notice and to what you see kind of in the U.S.? How would you contrast it?
Things it seems to me, being here, they seem to be better than the United States. There isn't the level of desperation that you're seeing in the United States and the level of panic that you're seeing in the US, which is really surprising. The other thing that I'm noticing is that people in Europe recognize the crisis that they have, but they seem to feel that, they'll muddle along, which I think is what most people think whenever they're in the middle of an economic crisis. They don't think that this is the end of the world. They figure that they'll muddle along and, it'll get better just around the corner. Now, whether that's true or not, I hope it is, but I don't think so. I do think, though, that at this point in time, it looks like Europe, for all its problems and its over-indebtedness and the problems of the Eurozone, seems to be in a lot better shape than the United States.
All right, so a betting man would, if you were to pick a country or two that you'd want to hang out during this global economic apocalypse, what's at the head of the list?
France. I mean, I really love France. I
know the women are beautiful and the food is great, but I mean, get your head, into the game here, Gonzalo. Talk to me more, specifically about, finances.
I think the smartest countries to go to at this point in time would be countries that you feel would be protected from a variety of threats that are currently in the air. Number one, the environmental problems that we're having in the United States insofar as fracking is concerned, the possibility of nuclear accidents in Europe and Japan and the United States again, the possibility rather, if not probability, that in the United States you're going to have severe capital controls, and you already have capital controls in Europe. So I think that all of these would lead you to think that probably the southern hemisphere is where you have to go. Now, the southern hemisphere being South Africa, Australia, New Zealand, Chile, Argentina, Uruguay. Those seem to be the countries that would be the safest to go, but at the same time you have certain environmental problems that are going on in Chile insofar as pollution in Santiago. You also have a fairly strict capital control system. They don't want money to just fly in and fly out of Chile, and so you have the possibility of that. Then in Australia and New Zealand, you have the possibility that the Australian and or New Zealand government will wind up cooperating with the American government in terms of extraditions, in terms of, renditions, stuff like that. So each of them has pros and cons, and you have to weigh them for yourself, but it looks objectively like the Southern Hemisphere is where you want to go.
All right, Gonzalo Lira, we're out of time. Thanks so much for being on the Keiser Report.
Thank you for having me.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Gonzalo Lira of liraspg.com. If you want to send me an email, please do so at keiserreport@rttv.ru. You can follow me on Twitter, of course, Max Keiser. Until next time, this is Max Keiser saying bye, y'all.